So then that brings us to what crazy thing did
the IRS do? It's not really the IRS, but
I don't know.
what
Yeah.
happened was,
Who's crazy? I mean, was the IRS crazy? Were the cardholders crazy? I mean,
is it just a crazy story?
it was the judge. Who knows? Who knows where the craziness is? There's some
Right.
craziness. I think we can all agree there's some craziness here.
There's craziness and there's mystery. Like,
Mystery.
where did the IRS find out about this? So, all
Mm.
right. So the story is, and a lot of people already heard this, but anyway, here you get to hear our take on it.
Mm. And we know
The
you're
story.
excited about that. That's why you're here. So,
That's right. The story is there's this couple that a number of years ago manufactured spend like crazy, and they spent like millions of dollars, and the IRS decided to charge them as if that was income, as if the rewards that they redeemed from that spend was income, and specifically this was from a Amex Blue Cash, what we refer to as the old Blue Cash, that earned 5% at like grocery stores and drugstores. And it used to not be capped at $50,000 spend a year. So this was back then. They were earning 5%, and they suddenly got hit by a tax bill. So they sued to say, no, it wasn't income. We don't need to. We shouldn't have to pay this. So, do you want to talk about the outcome?
Well. So I think it's important to note that, like Greg said, they spent millions. So the first year, I don't know, it was a couple million. Maybe the second year was 5 million they spent. So we're talking about, I think the IRS sent them a bill for tax owed on like 300 and something $1,000 worth of rewards. So they redeemed more than 300 grand in rewards. The IRS is saying, we want our chunk. And they said, no, it's not your chunk, because it's already been determined that rebates for spend are not taxable. So that's been the precedent anyway. Now, I should note right here, we are not tax professionals. We are not lawyers. So don't take this as tax advice or legal advice. This is just our opinion, guys. All right. So when we look at this, we say, all right, typically the way it's been, the longstanding thing has been that rewards earned on spend are treated like a rebate. Just like if you buy a camera and you mail in for the rebate, you don't get taxed on that as income. It's a rebate to encourage you to spend money. So that's the argument, essentially, I think the couple was making, that this was a rebate and shouldn't be taxable. And so it went to court, and the judge ruled in a very interesting way. He ruled that some of what they earned was taxable and some of it wasn't. So
yeah.
Essentially, what it seems the consensus is, from the judge's opinion, that the judge determined that the money they had spent on gift cards, like Visa gift cards, rather, the rewards earned when purchasing Visa gift cards were not taxable, because they were buying a product. They were getting a rebate for buying a product.
So even though they turned around and used those Visa gift cards to buy money orders or pay bills, it was still the thing that generated the rewards was buying a product. And so the judge said, so that is not taxable.
However, at the time, they were also doing something where they were, in some cases, buying a money order directly with the credit card. We're not talking about buying a money order with the Visa gift card. They were able to use their Amex credit card to buy a money order directly. And they also did some bill payments like that, where they paid a bill with their credit card directly. And interestingly, the judge found that the rewards earned on that spend were taxable, because the judge said, I believe anyway, that's my understanding, that they weren't purchasing a product or service per se in those cases. They were basically purchasing money. And so the rewards they were earning there was income, because it was, like a direct to money sort of a path. There was no product they were buying. Which is, I mean,
it seemed to be something like that. And just, I thought the second thing was not money orders, but was, so it was not bill pay, but was reloading reloadable cards.
Oh, right.
With their credit cards.
Yes, maybe you're right.
So I don't know which cards they're talking about, but you used to be able to do like Target Red Card that way with credit cards, and there were some other things that came and went over the years where you could use credit cards. It's worth stating that like the ability to buy money orders with a credit card is not something that has ever been like that widespread, and at least in my memory. The ability to do it, and certainly not something you're likely to encounter, and the ability to reload reloadable gift cards with a credit card is also something that's not common anymore. It used to be pretty common.
Right, right. And so these are things that, I mean, again, you got to take into consideration this was spend that occurred 7 or 8 years ago. It was quite a long time ago. And obviously the game has changed in the last 6 months, in the last year, in the last 2 years, and certainly in the last 6 or 7 years. A lot of things have changed that aren't available anymore. But it's interesting nonetheless to see the decision. And of course, we'll see long term what holds up here out of it, whether something gets appealed. But for now anyway, it seems that the opinion was that the rebate on buying a product that was not taxable, the rebate on buying money, essentially like converting the credit card limit directly to cash of some sort of cash equivalent, the rebate there could be considered taxable. What do you think? Is this going to have implications moving forward? I mean, are we going to start getting 1099s from Amex when they think we've been buying something that we should be taxed on? Are they just going to cover their butts, so to speak, and give us a 1099 for everything we've earned?
Oh wow, that'd be horrible if they did that. I certainly hope they don't do that. But the thing I fear that could happen and wouldn't be terribly surprising to me would be the IRS can choose. The reason the judge ruled that way is because there was precedent about how the IRS in the past has not taxed rebates from credit card rewards. And if the IRS could change their mind, basically, someone could change a rule and just say, let's make this clear and define the situations where it's taxable and where it's not. So, I wouldn't, while it seems like it's totally safe today to buy Visa or MasterCard gift cards and that you shouldn't get taxed on the rewards earned from doing that, I wouldn't say that, this necessarily makes me feel better about the future, because I think what it's done is pointed out to the IRS something that they could change if they're motivated to do it.
Right. And if they look at, one couple that perhaps was an extreme outlier here, but look at how much they did and how much there was there, I'm sure they can do the math on how many people out there have credit cards and how much they are potentially not taxing. So
yeah,
that's that was definitely shaky. And another thing that a couple of people brought up, I think, in the comments was, I wonder how this will affect paying things like taxes and mortgage through bill payment services like plastic, for instance. And that's a great question. I have no idea. I mean, because that could conceivably, I can see where somebody might interpret the decision to be that rewards on that type of spend are taxable. I mean, it seems like it would be, what a headache. I mean, what a headache this would cause.
I can't see that because so plastic is just the middleman. Because the organizations we're trying to pay don't accept a credit card directly. And if they did accept a credit card directly, there would be no question, right, that this is your normal kind of credit card spend. We wouldn't expect to be taxed on the rewards. I don't see that changing. So I also wouldn't see it changing when going through a bill payment service, because again, you're just paying somebody for some good or service. And that should be considered a rebate.
They were paying somebody for a money order so that they could pay a bill from someone who didn't take a credit card, right? I mean, wasn't that essentially what the couple was doing when they were buying money orders? They were buying a money order that could have been used to pay a bill for somebody that didn't take a credit card.
You could say that. I mean, the judge clearly didn't see it that way. The judge saw it as buying or not buying something, but basically converting it to money, I think is what.
Well, right, but I mean, who knows? I guess we're trying to put words in the judge's mouth here, but I'm saying if they had made the argument that they were paying bills with those money orders, would that have made a difference, do you think, in the outcome of the case, if their argument had been that we were using those to pay bills?
It seems reasonable to me that if if they had a case to be made that they were doing that, obviously they weren't, unless you count their credit card bill as the bill they were paying.
Right.
But yeah, I mean, I think then that would totally make sense that they're buying a product. Like, so if someone they're paying doesn't take credit cards but does take money orders, I don't see why that would not be legitimate in my totally inexpert opinion.
Right. I mean, yeah, it's an interesting area for debate, and what a can of worms it could open in terms of getting that
For
figured
sure.
out. And it does make me at least a little bit nervous in the sense that, we look at the fact that referrals now generate 1099s. And that was something really new a year or two ago, that all the banks started sending 1099s for referrals if you refer to other people for credit cards and things like that. And that was not something we had seen before, and something that I think is probably somewhat debatable in terms of whether or not that should be considered income. I think that people have made various arguments about how do you value those points, because like, for example, membership rewards points, they belong to Amex, right? I mean, if they decide to close your account, they can forfeit them all. They're not really yours. They're not really cash. So it's such a murky area, but something that I think the banks did because they seem to think that that was the best way to cover themselves in terms of making sure that they weren't running afoul of any rules. And so that's the part that makes me nervous here, that it's like, I don't even necessarily know that Amex really thinks that that should be taxable, as much as it's not worth it to them to fight that out. Right?
Exactly. I'm sure that's the case. That's
the 1099,
Right.
So,
right.
And yeah, that's,
and the only reason that's not happening, I think, with sign-up bonuses is that all sign-up bonuses require some spend, even if it's just first purchase or spend something. And so you could still make the argument that it's a rebate for spend, even if it's sort of ludicrously big rebate for that spend. It's still a rebate, Right. And it's hard to make that argument for a referral, I think.
For sure. For sure. I don't mean to complain about it, just that I think that obviously the banks didn't consider that income until just a couple of years ago, and they all seem to confer on that decision at the same time, which leads me to believe that that was because of some pressure where they thought, you know what, easier to just send the 1099s. I hope that's not what happens. I don't think that's going to happen for all credit card spend, but I just wonder, where this is going to go. But
no, I totally agree with you. I saw View from the Wing posted just yesterday, I think, that what's the bank, Basque Bank, that does the American Airlines miles, that you earn a mile, I think, per dollar saved, something like that, instead of interest.
Something like that. It's per some number of dollars. It's not a dollar per dollar saved. Right.
Whatever it is. Obviously, now that I think about it, wouldn't be that much. Yeah. But they only valued, for the purpose of those 1099s, they only valued them at something like 0.42 of a penny, which is much more reasonable than a lot of the things that have been coming out. Now, most of them tend to be valued at a penny per point, which is less than we normally value them at. But for some of them, like, I would argue the cash equivalent ought to be less than that. And
totally agree. Totally agree. I mean, you can't redeem an Amex point for 1 cent of cash unless you have the Schwab Platinum card. So for the vast majority of people that don't have that specific card, they can't get a full penny in cash, in dollars and cents. So I could definitely see somebody wanting to make the argument about that, though I can't see anybody probably having enough skin in the game, so to speak, to actually, fight that one out with the IRS. And again, that's the part that makes me nervous.
Well, I mean, theoretically, you can assert whatever you want when filing your taxes, and the only issue there is maybe you'd have more chance of getting audited or have more problems during an audit, I guess. But if it was something, if I had like millions of dollars equivalent of rewards, so that the tax impact was really significant, I think it would be worth doing that. But But normally, like, the amount of points you get through referrals and stuff that is taxable isn't enough to cry about.
Right, exactly. I agree. Well, hopefully there won't be enough to cry about for any of us in terms of future tax bills for rewards earned unspent.
That's right. That's right. We don't want to see
crying about that anytime soon.
Right.
Rather not cry. Don't make me cry, Amex. Don't make me cry, Chase. All right.
All right.